What is up, everybody? It is Thursday. Yep, and it's Thursday, May 13th. I forgot for a second there, but real brief trade review today. I only took 3 trades. I was green on all of them. So that was nice. 2 of them were pretty sizable. One of them was pretty small, but man, really solid day. Followed my rules well, sized according to plan, and it just feels so good to have a good day where you can walk away from trading and just think to yourself, like, damn, I executed a plan today. Like, I executed my plan hella well. You know what I mean? Like, that feels so nice regardless of the gains. I was at work and I was like, damn, dude, I did a good job. I did a good job today. And that's a nice feeling. You gotta have those days to, you kind of have to remind yourself or give yourself those pats on the back sometimes, because it's sometimes a hard gig, and I think that it's very easy to be critical because it's a stressful, it's a challenging thing to do, to trade. So don't forget to give yourself props. Anytime you do well, because it is rare to do well. They say something like 90% of people fail. I think that most of that 90 probably give up before they figure anything out. But it's still, if you're taking money from the market, then you're doing better than a vast majority of people. So it's important to remember that next time you're down on yourself. But the first trade I took of the day, again, I'm not trading pre-market. I haven't traded pre-market all week. I have not traded the open for the past 2 weeks. And I have not traded a ticker that I have lost on for at least 20 minutes after that loss. I'm trying to think. I think yesterday I was green on all of my trades as well. So I haven't really had to deal with the loss rule a whole lot. But anyways, it's besides the point. I'm following my rules this week. I feel really good about it. So my first call out on the day was at... I'm sorry. It was actually IHT. I lied. Let's see. IHT. And this one was actually a beaut, dude. This one was sweet. So I said... okay, where the fuck... Oh, look. It's still here. Dope. Dopest dope I ever smoked. Sorry about that. I should have been more prepared, but alas, here we are. So, yeah, at 743 down to 723. So that's where these are, 743 down to 723 here. I don't know what those are actually. So it's based off the 5 right here. Based off the wick right here on the 5. And 743, I can't remember where I got that from. Oh, I think I took it from right here, based on the top wick of the 2. Now, when it's your top of your zone and you're just trying to give yourself a decent spot, the 2, I try not to use it, but there just was no other price action to base it off of. I knew I wanted this to be a key level in my zone here, because at the time we were just looking at this, 847. We were looking at this. This is how much information we had. So, it was very difficult for me to, what do I do at that point, right? So I went with a 2-minute candle. You can see this wick right here at the 742, 743 area. Anyways, this is a barcode 10-minute. I don't like those. After the barcode ends, it sells off all day. That's happened for like 2 weeks now. So I'll take real quick in and outs on this bad boy, but I will not be looking to trade this all day. The second that I take a single win, or maybe 2 wins, if I think I can squeeze one out, I'm done. I'll delete the ticker from my watch list, because this tells me that it goes up and it goes down and it goes up and it goes down and it goes up. Like, there's no, middle ground. There's no consolidation. There's not a lot of great opportunities to, take good entries, to look for confirmation. You're pretty much just having to, I don't want to say gamble, but, you're having to put a zone down. And if it respects that zone, you just got to take the zone. I mean, sometimes you have the luxury of being like, well, let me wait this out and let me see if it consolidates here, right? Because then I'll feel better about adding, knowing that, it's consolidating and it is resting in this area. But right now, because the market is so up and down and up and down and up and down, once it gets to your zone, you can see it doesn't stay there long because there's no periods of consolidation right now. You can see that there's hardly any candles here where it traded sideways until much later on in the day after it had already faded. So anyways, I called my zone. My stop is right down here at $6.99, right at the whole dollar. Gave me about a 20-cent zone here. My PT was up here at 8. It ended up being a little ambitious. I ended up taking full profit at 7.8, and I scaled out a little bit at 7.6. So right now, I spoke about this a few times. It's very, very important to sell pops. You don't have to sell your whole position. Just sell half, whatever. That's fine. What I'm doing personally is in this situation, as an example, I had my descending bids. I was filled and full. Beautiful zone. Great respect to the zone, if I do say so myself. But it filled my bids right here. And you can see that this 2-minute candle kind of took a minute. And this one kind of came out the zone. And then this next one popped, right? As soon as this popped, I sold. And I got filled somewhere up here. I sell on the ask, and it got filled. So I know that it was above the current price because, the ask is usually a cent or two above current trading price. And then if it doesn't fill on the ask quickly enough, I'll sell on market. I'll immediately cancel and sell on market and just take what I can get. Because oftentimes right now what you're seeing is pops, and then immediately it comes back down. And I'll show you another trade I took today where that was a really great example. And I made bank because I sold the pop just like I've been preaching, and it immediately came against everybody right after. So if you were like holding or trying to have like a long-term day trade or something like that, or trade the breakout even, God forbid you trade a breakout right now, you would have gotten punished. So until I see otherwise for the market, I'm going to go ahead and take these. So this is actually a really good trade. I made $221. Which is amazing. That is I consider that a really solid winner. So it came down, filled me in full, popped. You can see, that it popped because this is all one candle right here. This is a 2-minute chart, so low time frame, and one candle was responsible for this whole push up to the 20. I sold as soon as I saw this bottom level break. You can see that that 7.6 was a key level here, 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 here. So I wasn't ready to combat the bears at this point to get it over that hump, because right now we're working a lot harder to get prices to go up, and prices come down a lot more easily. So that's just a good thing to keep in mind. Sell the pops. So I sold I took half of my position off here, and then what I did is I said, okay, well, if it comes back down, remember my entry is all the way down here. I think I had like a 725 average, something. I had a really good average here. Yeah, because right now, again, I know I've reiterated this, but for anybody who's just now watching, when I do my descending bids currently, I'm real light on the top and real heavy on the bottom. Because in better markets that are moving faster and more things are more consistent, I'll kind of do 200, 200, 200, 400 or something, right? Because I want, if I get tapped in just a little bit and it goes, I want to still be able to make money off that, right? So I'm prioritizing getting in more often with a decent size because I feel like moves will go more often than I am getting a really low cost average. Well, in this market, I'm shooting for a really low cost average. I'd rather have fewer trades on the day with much better entries. So I did 100, 100, and 800 or whatever. I don't remember what my whole position size is. I guess it would have been 20 cents. It would have been. Yeah, so it would have been 1600. So, yeah, pretty much all of my shares were down here at the bottom, at the third bid, or fourth bid. I can't remember exactly how I did this one, but Anyways, I had a really low cost average. I sold the pop right here, right? So now what I do is I raised my stop to the top of my zone. So I sold half my position, taking half a trade's worth of money right here for a, what is it, a little over a 40-cent move, which is a great trade. I move my stop up here, not to break even, but to up here, right? Because if the move does rapidly come against me again, which is very common right now, this week, last week, past few weeks actually, if it comes against me real quick, it'll stop me out for still a 20-cent gain, right? So I'm still going to make money. I'm sure I would have had an opportunity to make more. But I'm raising my stop even higher than risking $0 because price comes against you so quick. So that's what I recommend to people right now. Sell half on a pop, sell some on a pop, whatever. Just sell your position on a pop and then raise your stop loss really quickly to an area where you'll still make a little bit. And that'll give you, I promise that'll give you way more opportunities for highs or better trades with taking your profit at higher levels and things like that and not selling too early. Because I know that can be a big thing. I still struggle with that sometimes where I'm like, you know what? I might have left a lot on the table because I sold a little early right now. But in this market, people are scared, because it is so pop and drop. So that is why I recommend kind of creating your own trailing stop or using a trailing stop, I guess, if you are familiar with them. And I'm not personally. I don't know how to use them very well with my hotkeys and stuff. So I just will enter my own stops. I put one at 7.4. It didn't come to tap me out. It traded in a range. As soon as it had 7.8, I was out. Sold at market on this one. So I probably got filled a little bit below, but I saw the tap, and I was like, that's good enough for me. Count me out. Great trade. And you actually, I ended up saying later that I was like, damn, dude, I totally missed that it came back to my zone. You could have taken that exact same zone for a good ride. Another 40, 50, potentially depending on how much pain tolerance you have, you could have held it for a 80-cent move right there. I unfortunately did not. I didn't see it. By the time I did, it was all the way up here in this move, so it is what it is. But, that is a good way to take advantage of chop. When you're looking at chop like this, that's what this is. This chop. There's still opportunities and money to be made in chop. You just have to have your execution plan. Sell pops, raise a stop loss to where you're still in the money if you get stopped out, but it protects you from the rapid downside, which we see all too often. And, just err on the side of caution. Have more realistic price targets. This is not a time to bend risk management or oversize or start scaling size or anything like that. Just we're trading to survive and do what we can. That is what I'll be continuing to do, and I'm at least making decent money while I'm doing it. So that is always good to see. The next trade I took on the day was BNTC. I want to say that I didn't get filled in full on this one. Let me see. BNTC. Hopefully I left the lines up. Yeah, I did. Dope. So this one, again, this is... Oh, no, I did. I got filled most of them. So, another great example, right? Another great example of just pure chop with an all-day fader after the chop was done. You see? Once the chop is settled, it fades. That's what happens time and time again in these small caps here. And I forgot to mention in the last trade, on the 5-minute chart, the wick to fill me in the zone was a beauty. Great pin bar, wick to the zone. You guys know how I feel about that. I meant to say something about it. I totally forgot. Anyways, so I called BNTC 513 down to 5. I used 5 because it's the whole dollar here. And 513 was actually, was this high. I guess I just misplaced it. I'm sorry, 514 was my zone, 514. Yeah, so I was off by a cent, but that's what I base it off of, you can, a little bit of wiggle room. Anyways, so yeah, and then 5 is the whole dollar. So price ended up coming and filling me, I want to say 2 of 4. I was in real light, though. I only ended up making like $73 or something off this trade, and it was a solid move. I just was not in very heavy. So you'll see that right here, price came up. I actually called my zone at 848, so it would have been right here. I had called my zone during this candle. It came down, it filled me, and then it shot up. And again, you know what, what I've been saying, you sell on the pop, right? Because you got to imagine that this area right here is probably going to be an area of difficulty. You're looking at, you know, previous highs and stuff like that. You know, arguably like right there would have been the PT. But it actually popped, and I just immediately sold in full on the pop simply because I wasn't in super heavy. I wasn't interested in watching it come all the way back down. If I wanted to, I could have reset up my bids. But as soon as I saw this pop, the VWAP, I immediately sold. I think I got 530 or something for it, which is about a 40-cent move, 35-cent move, which is good, right? That we'll take those. You know, and then I didn't trade it again. After I saw the, you know, it didn't even get over VWAP. You can see that this volume right here for a pop, that is a pretty sad volume. So I was not confident in the move going forward. The trend didn't tell me anything. You know, it told me that it was chop, and I said, okay, yeah, I think that we'll delete this one from the watch list. So I took that single trade on it at like 8:50 in the morning. Yeah, sold. I said right here at 8:54. Sold the pop on BNTC for a quick 25 cents. So I must have got even less, or my entry was higher than I imagined. But yeah, you know, no qualms about it. You know, I sold it, and I regret nothing. Okay, so the next one was the big one. So, Reli, R-E-L-I, Reli. Let's see. So again, you're looking at significant chop. How do you navigate chop? You're in and you're out, and you don't hold on to winners, you don't hold on to losers. You can actually see here that my risk, that my risk reward was basically a 1-to-1 in this situation. I ended up getting a little bit better than that, like a 1.5-to-1 or something. But you know, I was mindful that like if it came against me at all, I was just gonna close out for probably not even wait for this to stop me out. But you can see that my stop loss was based off of the low of the trend, right? As you can see later on in the day, that same level was respected, you know, which is a good sign. It means my stop loss was in a key area. Obviously, that was, you know, I didn't know that at that time, but so anyways, yeah, I called out my zone. I said, oh wait, is this not? No, this isn't it. Oh yeah, this was later. So this was at 9:13 would have been right here. Oh, okay, yeah. So I'm sorry, at 9:05. I don't know what these are then. So my zone was actually better. I must have moved that shit up. So at 9:05, I called out my zone 4 to 3.9. So that must have been a secondary trade. Oh yeah, you know what? I did call out another one I ended up not taking. So here is where my stop loss was. So the reason my stop loss was down here, I totally remember now. The reason my stop loss was down here was because, you know, this is the forfeiture of the trend. If it comes down past that, I know 100% that the trend is now, you know, no longer setting up higher lows. And I want stopped out because, you know, that exposes me to a lot of that downside if the trend is now, you know, trending the other direction. I always want to see higher lows, and a second I don't, you know, I don't want to play that trend, which is why it's always easy to have the lowest part of the previous trend pattern be your stop loss, because you know that if that's gone, you know, it's easy to tell yourself, oh yeah, this trend is botched. So anyhow, I got filled in full. As you can see, it came against me a little bit. You know, we could have potentially had a 3.8 zone based off of, you know, maybe this wick right here. We could have even had like a 3.79. That would have been hot. But I ended up basing my zones off of, you know, 3.9 and 4. So the whole dollar plus these candles you're seeing here. where I based my zone off of. Could have probably had a better zone, but you know, it is what it is. That's why you got to give yourself wiggle room. You can't have just like 5-10 cent stops all the time. But anyways, I got filled in full right here. And then it came up here, right? And when I saw this is very important because this has happened twice now. It happened yesterday on... Oh, I can't remember what the ticker was. I can't remember what the ticker was, but there was another, I think it was DDD. But there was this huge, like, look at this. First, it was this one. It broke above the zone, touched the 20, and it dipped real quick, and then got immediately chewed back up. It would bounce down here, and then immediately turn back into a wick. And that means that people are buying up that dip as soon as they see it, which usually gives me a sign when a price is getting stuck between like an indicator or a key level or something, and it's just getting bought right back into that zone. It eventually bursts. So you can see that right here at 921, I said 921, stop at trend fail, still holding for the 4 break. Rally is about to squeeze. And that was right here at this candle that I was talking about, this large bar. So what did I do? I actually bought and added to my size. So I added to my size right here because I was so sure of the conviction. Now, what do I do when I add to my size? Well, if I'm not, in order to minimize my risk, since, you know, obviously now my stop loss is very far away from my position to be, you know, potentially 1.5 times as big, twice as big, what have you. So I move my stop loss up to, you know, where my initial entry was or close to it, so that if it does come against me. So in this moment in time, it's important to understand my thought process. Let me explain it better like this. So at this moment in time, I see my zone get filled. I'm in full. The next thing I see is this eruption bar right here. I looked at the 5, I looked at the 10, wicks in the zone, feel pretty good about it. An eruption up here to 4. It kind of meets an issue, gets over 4, gets stuck between the 20, wicks down, wicks keep getting bought up. And that tells me, okay, in my mind, I'm seeing a squeeze is about to take place. As a result, how do I want to play this squeeze that my theory is that it's going to squeeze to the upside? So I'm going to add my size in this zone based on this wick getting chewed up. And I ended up doubling my position within these 2 wicks. But because my plan is this is going to squeeze up, it's very easy for me to mentally say, okay, my stop needs to come up, because now my plan is not trend going up, trend fail, stop me out. My plan has changed, right? I've adapted my plan based on this price action within the zone. Everything was going right for me. And I said, okay, time to call an audible. Now my plan is that this is going to work out. And the reason I'm explaining it like that is because the second that it doesn't squeeze and then it comes back through I went out, right? Because what I'm basing my play off of and my position off of in this point in time is the squeeze upwards. Just based on what I was seeing. I saw the same thing yesterday, and I said, oh shit, this is about to, once it pops, it's going to pop nasty. And so I added to my size and I moved my stop up, because if it comes against me, I know, okay, I was wrong. I was wrong about the squeeze. So go ahead and stop me out. And so it's important to have those adaptations where you call those audibles and you think to yourself, okay, now this is what I'm seeing. This is the move I'm about to play. This is the play in my playbook that I'm going to go after right now. I'm changing my plan to this because I see this taking place, or I potentially see this taking place. And when you do, though, it's important to not have my previous play stop loss, right? Because with double the size, all of a sudden that's a big loss if he comes against me and I wait till that point. There's no point in having my previous plan's stop loss take place in my next plan's, course of action. I hope that makes sense. It made more sense in my head. But anyways, the price did squeeze and I immediately sold the pop. I ended up getting like 424 or something out of it from like a 3.9 and twice as big. It was a big trade. And then the reason that I had the lines here. Oh, and for the record, when it did pop over, it immediately came back down. You see, all the way back down here, and I was like, oh shit! And eventually ran up real good. After this, I said, let's go at 9:35. So right here, I said I gotta go to work, so no position, but watch 415 to 408. And it was a to the cent wick up for 40 cents or up for 32 cents. And you could have played this zone like a real zone. Unfortunately, I was departing. I was leaving. This would have been tricky. I would have pretended. That's why I had the chart like this when we pulled it up. I would have had my stop loss probably right here. I would have shot for this resistance. But you're looking at a 1-to-1 risk to reward here on this one. I mean, this wick is pretty killer. This would shake out most people, I'd imagine. But realistically, I would have bought here and then sold here, and then bought here and then sold here. Like I wouldn't have consolidated or added to my position to hold for this, because it's not the type of environment we're currently in. I would have taken this, sold that, taken this, sold that. Remember, buy them snips, sell the pops, and don't give price time to come against you. Don't sit in a position longer than you need to. Don't be holding for the high of days or the breakouts or what have you, because it's just not the setting we're in. I don't really hold for that stuff anyways usually, but I'm taking now anywhere from 1 to 5 minute scalps. We're usually I'm kind of a hybrid scalper where I'll take a 6 to 20 minute position depending on if the trend's still moving. I can add to the winner. I can extend the play. But right now I'm in hyper scalp mode because it's just the environment we're in. Instead of like, why would I hold this and just be like, all right, well, this isn't good enough. Once it pops through, I'll sell. So I'm gonna hold through all of this to sell up here when I can take 40 cents, take 30 cents, take 40 cents, take 30 cents. You know what I mean? Like I can have my downside risk be down here. And a second it comes against me and I'm like, well, I can immediately sell. I don't have to wait for my stop loss to get hit. Don't give these stocks opportunity to come against you, especially when you're in the money. So sell the pop, sell all of it, sell half, whatever you want to do. Just make sure you raise the stop loss up to at least break even after you've sold. And don't ever, in this current pop and drop market, let profits come back against you to stop you out for a loss. Move your stop loss up, do a trailing stop, sell the pop, trail that stop a little bit. That way you're giving yourself a chance to still make money, but exposing yourself to, the might be of the move going forward. That's the best thing I can recommend to you guys. I did take a short on Tesla today that was a freaking monster. I can tell you exactly where it was. It was right here. So this was my zone on Tesla. I ended up holding for this area here. So I ended up getting filled, I think 2 of 5 bids here on Tesla. For a short, essentially it's the exact same thing I do when I'm trading small caps. I'm just doing it to the, upside down, essentially. So then my stop was right down here, based on these previous technical levels. That would have given me, like at the time, VWAP and stuff like that. It would have, I wasn't prepared to hold through all this previous price action. As you can see here, it pretty much did the reverse of what it did in pre-market. Interacted a lot with this general area of price. You can see that was a bit high, but you get what I mean. Look at all the interaction of it mirroring that later on in the day. Anyhow, just real quick, I know that most of you guys don't short large caps or whatever, but it's a good example of just seeing exactly how I do large caps, which is actually what I did for most of the day. I took my 3 winners on small caps, and I was like, I'm not even going to trade that account. So I traded only the firm's large cap account for the rest of the day. I got filled in up here, 2 of, I think, 5 bids. I do it this exact same way, descending bids. Now, because these gaps are usually like, this is like $2 or something, you got to spread your bids out a little bit differently, and definitely be mindful that by the time it comes to the bottom of your zone, you can if you put 100 shares up here, you could be $200 in the red already. So that does take some adjusting. But you can see that this is a previous area. I was like, I'll take it again if it comes up here, if it bounces at this previous zone. So it ended up coming up here. I held for this area. As soon as it popped through this, with this, and it came down, right? As you can see right here, it kind of came up a little bit. No big. My stop is way up here. I'm in the money. Hardly, you don't even really have to watch it that much. And as soon as this gave, I was like, oh, this is nice. And then it did it again. And when it gave through here, I took half profit. I said, if it comes back against me, back to this level, the previous highs, this 5.7 was a pretty key interaction level, you can see, for multiple different instances of price. So if it comes back to 570, I'll just take the rest of my profit. That way I know that I still make money. I'm still making, what is that, $4, $3 or whatever. Worst case on the remaining shares I have left. And then it broke, dude. And when it actually ended up, I would love to say that I held this long, but I didn't. As soon as it caved right here, and then it went right here, and I sold right at like 565. So I only made it another $3. But boy, I mean, you're talking about a $12 move, right? $13 move, which is crazy. I mean, I made more in that one trade than I did on all my small caps, simply from one good trade on large caps. And it's nice to know that is an option when markets are selling off and things are red. That doesn't mean that it's completely no opportunity to make money, right? You just got to know and have a few different tricks that you can implement when things aren't the picture perfect, your favorite scenario or setting or environment that the market might currently be in. So on days where small caps were kind of weak to me today, I took the 3 wins I got. I didn't really like much else, so I went and I focused shorting on large caps. This one Tesla trade I took based on the same strategy I used for small caps, just upside down, and I netted a sweet trade. I was really happy with it. And then again, after that trade, I was done for the day. I'm not interested in pushing my luck right now. It's just not the environment you push your luck in. But yeah, I mean, that was all I traded today. I hope that helps. Obviously, you guys are more than welcome to contact me anytime if you have any questions. My DMs are always open. So that will be it for me today. I'm going to go crash. I hope to see you guys tomorrow for an even better day of trading. And I hope you guys all do great for the remainder of this week. So I'll catch you later.